Hello, everybody. This is Alan Elman, the Blue Collar Investor, with another one of my sample trade videos. This one, which was executed on May 13th, 2025, and expiring on May 16th, 2025. So it's a 4-day trade. Now, this is a defensive 4-day trade with a cash secured put using Palantir Technologies listed on the NASDAQ exchange under the ticker symbol PLTR. So, why was Palantir one of the securities that I selected to use in this week's portfolios? Well, here's a little screenshot taken from our most recent BCI Premium Member Stock Report, which is published every weekend for our premium members. And I highlighted for you in the yellow row Palantir. You could see that it's ranked number 2 on the IBD 50. So it's a very strong security from both fundamental and technical perspectives. Now, it's located in the software industry segment, currently ranked B, or in the top 20 to 40%. Last week, it was also ranked B. Now, moving along, the mean analyst rating, or MAR, is a 2.93, which puts it slightly above average. So let's call that a good mean analyst rating. Now, moving over here to the implied volatility, we could see that it's 63.9. So that's a very robust implied volatility, which means that it gives us a lot of flexibility. We do have to be cautious on the downside. So we always have to have our exit strategies available if needed. But that's a very robust, to give you an idea, it's about 4 times that of the S&P 500 as I'm creating this video. Now, the next earnings date is August 4th, so it's not interfering at all with this particular trade. And this particular security has been on the BCI Premium Member Stock List now for 6 consecutive weeks. So that shows you why this is one of the securities that I selected for this week's trades. Now, as it turns out, Monday, I had a very busy business schedule and decided to enter my weekly trades on Tuesday. So that's why it's a 4-day, not a 5-day trade. Just to give you an idea of the price performance of Palantir over the last month, I'm showing you now a screenshot of Palantir, which is the orange line, compared to that of the S&P 500, which is the blue line. So you could see very impressive price performance over the last 1 month. Okay, so since it's a defensive trade, what that means is we're going to use a deep out of the money put strike. In other words, a strike much lower than current market value. Current market value when I entered the trade was 129.63, and I'm going to use the 120 deep out of the money put strike, which generated 56 cents. You'll see that coming up in my broker screenshot. Now, I'm using 200 shares of the underlying. We're not actually buying them, but I'm selling 2 contracts. In other words, agreeing to buy the shares at 120 at a time when Palantir was trading at 129.63. Now, the trade management calculator spreadsheet will give us the following data. If taken through expiration, this represents a 4-day trade. The break-even price point, which is the put strike minus the put premium, is 119.44 from a time when the price was 129.63. And that represents, you see in the purple cell here, a discount of 7.86% if the price of Palantir drops below the 120 strike and we take no exit strategy action and shares are put to us at the break-even price point of 119.44. Now, the brown cells represent the actual initial time value returns, which you can see here is 0.47%, and based on a 4-day trade, annualizes out to 42.78%. In this screenshot, I'm showing you the broker confirmation of this trade, where I generated 2 contracts at 56 cents, so $112 minus about $1 10 cents in trading commissions was generated into my account. And that again was for the May 16th, 2025, 120 put. So my initial trade unrealized status was I generated $112. The amount that I'd have to put into the cash account to secure this trade was $23,888, and that secured both puts. So that means my unexercised return is 42.78% annualized, 0.47% for the 4 days. And to actually realize this, Palantir must remain above the 120 strike by expiration this Friday in 3 days from when the trade was made. Now I'm creating this video on 5/14. Okay, so it's Wednesday and it's 10:30 in the morning. Currently, Palantir is trading at 129.65, which is 2 cents higher than when I executed the trade yesterday. It also is $9.65 higher than the put strike, which was the 120 strike, if you recall. And it is $10.11 above the break-even price point of 119.44. So with about 2.5 days left, we're situated pretty well for a successful outcome. Although remember, I told you it has a high implied volatility, so we have to constantly monitor our trade. I check it at least once or twice a day, sometimes more. Let's summarize now. Significant returns can be generated even with a 4-day defensive cash secured put trade, as we did with Palantir. Now we can craft these trades based on current market environments. Right now I'm taking predominantly defensive positions like I did with this one. Yet, because of its high implied volatility, we're still able to generate significant returns. And we have to keep an eye on that implied volatility in case it turns the other way. But again, over the last day and change, since I entered the trade, Palantir is holding its own. So ladies and gentlemen, that ends this video, sample trade video. I'll continue doing these for you, showing you at least one trade I execute each week. This one was with Palantir Technologies, a 4-day cash secured put trade. Ladies and gentlemen, I hope you enjoyed this presentation, but most importantly, I hope you benefit from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.